My name is Sarah Haig, and I am the Senior Vice President of Global Sales and Partnerships for MasterCard's Identity Group. I've spent a little over 30 years in the world of everything from financial services to anything as a service, and probably since about 2005 working in the risk space. Super happy to be here.
Good afternoon, everyone. My name is Billy Haile-Mariam. I'm a senior backend engineer at Greenwood Bank. We're a neobank fintech startup based out of Atlanta, primarily catering towards black and brown customers that have been underserved in the banking sector. I've been a software engineer for about 7 years. I've worked with very large banks in the past, but this is my first time going into a startup world, and been working on the KYC decisioning engine and approving and denying customers for bank accounts. Thank you.
Good afternoon. My name is Graham Bullock. I'm also from MasterCard. I'm in the new data security business unit, so I lead business development for that business unit. We specialize in behavioral biometrics and device intelligence, so slightly kind of different from the direct synthetic ID solutions. I've been in cards and payments for about 23 years, mainly with service providers, and mainly actually in fraud and risk.
All right, so obviously we have a wealth of knowledge for the fraud space on stage here. So, Sarah, maybe I'll go to you first. How have some of the fraud threats, and obviously synthetic ID fraud, evolved over time, and kind of what have you seen today, maybe versus some previous years, and kind of how are those threats continuing to evolve?
Sure. Maybe first it might make sense just to level set. I'm sure most people in this room have very, very extensive experience and understanding of the fraud space. But when you think about first-party fraud, if you're thinking about it from an individual level, maybe I go and do something pretending to be somebody else, or from a payments perspective, a payment goes through from someone who's pretending to be something else. And the usual tie to that is there's financial gain to be had. Then you think of, something like second-party fraud. I give my personally identifiable information to someone else to commit fraud. And then when you get into third-party or synthetic fraud, sometimes you hear about it being called Frankenstein fraud. Somebody cobbles together bits and pieces of information. Some of it may be valid or tied to an actual individual. Some of it may be something that is generated, but nonetheless, it's pulled together to commit fraud using this fascinating set of information to create that identity. When you look at it historically, it's super simple from my perspective. Kind of the more things change, the more they seem the same. I think that no matter what the situation is, fraudsters are by nature very curious. And when they see something that they want to try and trick, they're super smart. They'll try and figure out a way to trick it. And so I think the thing that stays the same for me is no matter what, I always think about like a leaky bucket. What are the holes in the bucket today? And what are the potential holes in the future? So when you're a financial institution or when you're a service provider, you're always thinking about it through the lens of how do I plug the holes that might be in the bucket today, and how do I anticipate what the holes in the future might be? If you're a fraudster, it's, how do I get into the holes that they've already plugged, or how do I find a new one?
Graham, there's certainly been a lot of uneasiness in the market today, and obviously when that happens, fraudsters tend to try to take more advantage of what's going on. So how have some of the fraud patterns and trends during economic uncertainty evolved? And kind of what have you seen in your role, and how that's kind of evolving today?
So I guess if you look at trends, so independent of economic uncertainty, fraud is always there. It always has been there. Now, I always used to sit in these rooms and think, I was always learning, because there was always people in the room who'd been working in fraud a lot longer than I had. I kind of forget that I've been in the fraud industry for
Now
some
you're
time.
one of them.
So there might be some people in the room actually sitting there who don't actually know what kind of physical fraud is with a payment card, right? It's all been in the digital space. I mean, the biggest change I've seen over the years has been from the physical world to the digital world. But then even within the digital world, it all started out as unsophisticated. Okay, mass scale, everyone's relatively new to banking online, relatively new to using their card online, and fraudsters would exploit that, and they could exploit that at scale very easily. Now we've started to put these solutions in place that can detect and mitigate that kind of unsophisticated fraud. So now we're seeing the shift to sophisticated fraud, and that's incredibly difficult to stop. It's not impossible, but it's where fraudsters. When I talk about sophisticated fraud in the digital space, it's where fraudsters are now trying to mimic us as individuals. They're either trying to mimic us with our data, correct data, or mimic us in the way that they access accounts or buy things, by their typing patterns or changing devices, or when you buy a username and a password online, quite often you can buy an IP address and a location with it. So fraudsters are able to spoof that, and that becomes very, very difficult to detect, particularly with point solutions. Economic uncertainty, we could talk about, it's basically any type of loophole that's out there for a fraudster they will attempt to exploit. The pandemic is the easiest, the most recent example, where you have these new initiatives coming out that we never had before. So government disbursements, right? That's money that's being dispersed digitally, going out to individuals who have been impacted. So you'll see a fraudster trying to capitalize on that and exploit it. So it's very difficult to talk about kind of economic uncertainty. I think we need to understand that fraud is always there, and it's always changing, it's always evolving. The final thing I think that I've noticed is that it's becoming more personal. So in the digital space, we all think, well, we don't have a face now. So fraudsters can attack organizations at scale, and they can hide behind identities. But now they're actually starting, when you put barriers in place, they're starting to go, well, do you know, I need to be more personal. I need to now start finding ways around this. For example, contacting genuine customers and making the genuine customer perpetrate the fraud on their behalf, unbeknownst to them. So those are, I guess, the key trends that I've seen, and it's really going from that physical space all the way through to now the very sophisticated and personal digital fraud.
Billy, your Greenwood has always been digital native. So how have you seen the trends evolving from your perspective as a digital native company with digital native customers, and how have you adjusted your fraud strategies kind of as they evolve and you look to better protect not only Greenwood but also your end customers as well?
Yeah, that's a wonderful question. Thank you. So Greenwood started out a few years ago. So when we started, a lot of the techniques for synthetic identity fraud were already well established. So we kind of had to learn these different tips and tricks, like after there was already like an army of people trying to get onto our platform and commit this fraud. So we had a very steep learning curve ahead of us. I think it was very important for us to cross-reference different tools and leverage them against each other to be able to figure out what does a good customer look like and what does a bad customer look like. And there's an extensive amount of data analysis that you have to do, and analyzing historical data of your customers and having the data available is actually very important too. So it's definitely like a data journey, like getting the data that you need, doing a regression analysis on it, and partnering with a really good vendor that can help you do that. and try to understand like what does a good customer look like, to even begin the conversation of saying, okay, what criteria should we use to classify a customer as good or bad or somewhere in the middle. So we definitely did that journey. We've been integrating with, Ekata, which is a MasterCard product, for almost a year now. So it's been a very long process, but it's also a very difficult process because you don't want to alienate good customers. And if you're a startup, converting customers from prospects into actual customers is very important, to the livelihood of your business. So it really depends on like what kind of business you are. But for us in our journey, it was very important to go slow. That way we could eventually go fast and turn it on. So that's kind of where we're at. But very useful. And I like to think of it like a Swiss cheese defense. That's what I read about all the time and always tell myself, as many layers of Swiss cheese as possible. Somebody might get through one of the holes but have another one to block it. And with enough holes or enough layers of Swiss cheese, you'll hopefully block out as much bad guys as possible. So there's no one tool, there's no one answer that'll get, be a complete solution. But with enough layers of defenses, hopefully, you'll be okay.
Synthetic ID is obviously playing a bigger role in account opening and account takeover. I mean, how do FIs ensure they're using the right tools? I mean, it's an evolving threat that is obviously very sophisticated. So what can FIs do, fintechs do, to kind of ensure they're combating this threat in the best way possible to protect themselves and their end customers? Maybe Sarah, and then Graham, love to get your thoughts as well.
Having spent a fair number of years at large FIs and a couple small ones as well, I think the biggest thing that my mind goes to is collaboration. The larger the organization, the more siloed it can become. I was just having a conversation with someone about this morning on a slightly different topic, but every part of the organization has their piece of the business that they're focused in on. Laser focused as they should be, but sometimes to a fault. And each different part, so maybe corporate banking, maybe institutional trust and custody, which is near and dear to my heart, maybe corporate trust. All the different areas have their own compliance departments. All the different areas have different components of risk tied to them. If those pieces, along with any overarching corporate functions, can work together and communicate on a regular basis, one, to understand what the problems are that they're facing, two, to be aware of what the solutions are that they've put in place, and then three, to collaborate. I mean, there's so much efficiency to be gained from that perspective, whether you're talking about cost or whether you're talking about knowledge. But then also, if it's a smaller company, talk to your peer groups. Even the larger organizations, I think what we've seen in recent times is some of these industry groups are getting together, and it's specifically tied to risk. I won't even go so narrow as fraud, but to risk, where they can really get a holistic understanding of where the threats may be currently, and some of that live, up to the moment information is being socialized. So just collaborate as much as you possibly can.
Okay, so that was one of the things I was going to say, but just to follow on from that, for me, collaboration has always been one of the key defenses against fraud. Now, you don't find it as much in other industries or even in other functions within our organizations. If we think of marketing and that kind of thing, where we don't openly share what's happening to us and how we're reacting to it with other peer organizations. But in fraud, we have done, and you see huge benefit in that. And I always, when I hear about collaboration, I always look at it from two angles. There are two types of collaboration that we can all get involved in. One is physical. And that physical collaboration is happening right here today, where we attend events, we network, we share ideas, we share experiences, we listen to talks. So that networking physically amongst us can help all of us with ideas that we can take back into our organization and help others. The second one is more the network collaboration. So where we have some meaningful intelligence, the more meaningful intelligence we can share in the fraud space, it will help all of us collectively. And that can be, the likes of shared network data, consortiums, anything where you can consume some intelligence that's being provided by someone else. And it just made me think of when I talked about the fraud trends and how long I've been in the cards and payments industry, and that physical fraud through to digital fraud. And in the physical world, as you can tell from my accent, I'm not from around here, so I'm not sure if this happens in the US, but my sister used to work in a retail shop on the high street in the UK. And they all had, she was a store manager, and they all had walkie-talkies, CBs, radios, whatever you call them, in the back. And it was every shop along that high street had a walkie-talkie all tuned to the same channel. And as soon as there was any physical fraud in any one of those shops, team leader would get on the walkie-talkie and would radio all the other shops. There's a tall guy with blonde hair with a British accent going around using stolen cards. Right? And it was that prevention thing that gave everybody a heads up preemptively, and they could put the right focus on who was coming through their door. Right? And that's what we need to do in the digital space, because we don't have that physical ability to do it anymore. And then the other key thing, the final key thing on tools we can adopt is behavior. So with sophisticated fraud, fraudsters are trying to replicate who we are, either with our data or just going online and buying things or logging into our accounts. If we understand the behavior, it's unique to all of us. You can't buy it. It can't be sold, it can't be mimicked at scale. So if we can focus on something that's behavior, meaningful intelligence, understanding who our customers are on an individual basis and feeding that into our decisioning process, we're going to be in a far stronger position to get around those sophisticated fraud attacks that are using real, live, genuine, viable data.
I thought of one other thing, too.
Sure.
It sounds so much better when Graham says it. But when I look at all of the attendees that are at a conference like this, all of the booths that are out there, there are constantly new partners that you can be working with. Stay close on that, because there's so much innovation that happens to really get ahead of whatever the new fraud may be. Be aware, stay connected with your partnerships, understand what their innovations may be, learn about the new ones that are out there too, so that you can try to proactively plug any holes that might be coming up in your bucket.
Yeah, I mean, there's no silver bullet. I mean, it's just a holistic approach. Billy, obviously, speaking to some of what we're discussing, you have the million-dollar question of kind of the right balance of catching a bad actor and letting good actors in. How do you think through the friction battle, and ultimately reward good customers instead of just blocking bad actors? I mean, how do you think through that balance?
Yeah, that's something I've had to think about a lot too. And we all have at Greenwood, especially dealing with the publicity that we have as a rising startup fintech company. So I would say, first of all, we've had a great approach of not rushing the process and going slow, not being afraid to go slow. A lot of times, in technology, we're driven, especially in startups, by delivering features. But when you're talking about your conversion funnel from prospects to customers, you have to be very, very deliberate and very attentive to that process, and be very careful not to go fast and then, just in the name of getting a feature out or getting something out the door, which is a thing in startups, right? So we have to be very careful about that. I would say one of the best things that we did was integrate and kind of pair the fraud prevention process and really a lot of the different things that we have behind the scenes with feature toggles, and that was very helpful because that gave us the ability to try something out test it out for a few days or a week or so, and if it's like, oh my God, turn it off right away. We've had to do that a few times just to really fine-tune our scoring mechanism to figure out what exactly is a good customer, what's a bad customer. That gives you the opportunity to innovate and experiment in the real world, which, for a startup is very helpful. So I would say experimentation, having the ability to turn things on like instantly and turn things off, and then put those different defenses that you have. I think of this as a battle, right? These are gates to the castle, and you want your gate to be able to open and close quickly. And you might have to rework the gate while it's put away, but having that mechanism in place has been able to help us move quickly, move in an agile fashion, and not block out too many bad customers, because we don't have to wait for a new deployment to go out while we're getting hammered with accounts that are trying to get opened and they're get declined because, oh, we thought you were a bad guy, but actually you're a good guy. The minute that we detect something, we can turn it off and we can go back and rework it. So that has been like very important for us.
Do you put your cheese in the gates? You've got gates, you've got cheese. There's no getting through, is there?
I think we've taken this analogy a little too far. I like the gate analogy more than the cheese analogy, so let's go with that.
Well, we've gotten a bunch of questions coming in from the audience. One that I want to bring up is one we were talking about before, which is collaboration. From Prasad in our audience, we all agree that collaboration is key to success. How do we collaborate industry-wide? What's happening now, and how can everyone participate?
I think being here is a good start. And if you see people, or I would encourage if someone wants to come up, Prasad, if you want to talk to us afterwards, we're happy to talk with you. But I think the easiest thing, it's so much easier with talking back many years ago. It was hard to find groups ages ago. You can go online, you can find local groups, you can get connected through industry groups. There are publications that come out on a regular basis, and there actually are different types of formal and informal organizations that you can become part of, where you really do have, you can have high-level conversations, or you can really get into the weeds that deeply both share the information about what types of fraud and what types of activities are happening, but also what the solutions are. And so it's a great brainstorming forum. Off the top of my head, of course, I can't think of any of the names of them, but if I did a quick search, I could pull them up for you pretty easily. But I think being at events like this is definitely a good start.
Yeah, I mean, you actually mentioned partnerships earlier, which is key. So when we are within our own four walls and our own organization, we have limited visibility. The more that we can consume meaningful intelligence, so I need to be careful about that. It's not about consuming data. It's about consuming meaningful intelligence. That's going to help us all, and also feeding back into it, right? And the way to do that is through partnerships. So those organizations that are out there that span multiple geographies, they span multiple industries and span multiple customers. They're going to have a much broader, wider lens than you will ever have, and you can benefit from that. So, think about who you can partner with and how you can partner. There are schemes as well that see lots of data and are willing to share that data with you. And then if you can make that meaningful, then you're already winning.
Billy, I think that question there is an interesting one for you, which is, since there's not one magic bullet solution, you have to use a suite of products or vendors to mitigate fraud. How do you balance kind of the rising costs that might come with those with keeping out the bad actors, and kind of how that balance plays?
Yeah, this is a very insightful question, and I've talked to some of the KYC people and compliance people at my company about this, but I think you really have to reframe the thinking around this. Blocking out of somebody, a fraudster, as early as possible. I mean, if you think it's expensive to pay vendors to aggregate the data or work together, imagine how much money that fraudster could cost you over the life of a relationship with your company. I think it would be a lot more expensive Of course, you're never going to be able to eliminate all fraud, right? That's not possible. We can try, right? But even one bad actor, I had a friend that had $20,000 stolen from them out of their Coinbase account, and they were locked out, and it was synthetic identity fraud. You don't have to have every fraudster make that kind of return on their investment. It just happens to happen a few times. And with the amount of technology that's increasing today, with AI coming out, and we see a lot of bot fraud, like bad actors like just swarming us with bots. I mean, they can just hit your platforms really, really fast. So I think you have to change the thinking around this question. I don't think we can afford to not put these gates up. And I think it's a short-term thinking that we can save some money in the short term by kind of ignoring a problem that's going to kill you in the long term, right?
It's like insurance, isn't it? Nobody wants to pay for the insurance until they get hit with something.
Yeah.
And it's all business case based, right? So it's gone from the questions there. I don't know who asked the question, but your organization may have a lot lower fraud rate than another organization, so therefore your spend on fraud maybe doesn't need to be as high, or you don't have the return on investment to invest in multiple solutions. So it's a very personal thing, and I think you just need to look at the business case on it, and also that insurance piece. It's do you want to be hit? I will give an example of a bank years ago in my previous role, who we had a solution for them for SIM swap fraud, and it was going to cost $50,000 to implement, and they said that's too expensive, and they didn't want to implement it.
What's the cost of doing nothing?
Well, they knew the cost. They got hit 3 times for $50,000 each, $150,000.
That was going to be my question.
And we got a phone
cost
call.
of doing nothing?
That's it.
Yeah.
And we got a phone call the next week, and $50,000 was very cheap. Yeah.
And I totally agree with that. It's a case-by-case decision for businesses. We're an online bank. We're going to get hit a lot, and we do. So I don't think we spare really any expense when it comes to fraud and protecting ourselves in that regard. But if you're not in a tightly regulated industry, or that the risk isn't as high, and that's a decision that you have to make for yourself.
Another interesting one here is synthetic identity and identity theft can at times be hard to differentiate. Any tips on this? Also, how critical is it to label ID theft versus synthetic?
I think if you ask the person whose identity had been stolen, that gets at the heart of the answer to that question. So it probably depends on where within the ecosystem you're trying to solve for. To me, at the end of the day, the most important person in any equation from a business perspective is that end customer. And so doing whatever you can to ensure that they feel protected and are made whole is the most important piece. And so from their perspective, even if the cause of their identity theft is synthetic ID fraud, do all the things that you need to do to make that right for them. It will go a long way in the long run, and it's fundamentally the right thing to do.
Well, I was going to ask Billy, you obviously see that as a bank yourself, the identity theft versus synthetic?
Yeah, this is a hard problem to solve, because at some point when you detect fraud, at some point it'll reach a manual step, right? And we don't like that. That just takes time, takes money, and a lot of energy. But a manual step has to be done to figure out what kind of fraud this is and bucket it appropriately. I would say, in terms of providing feedback, or feedback in terms of meaningful data back into the larger ecosystem. If you don't know exactly how to categorize it, maybe don't feedback something that you're not 100% sure about, right? It's better not to say anything than to say, oh, this is third-party fraud, when you don't know for sure that it's third-party fraud, because you're just kind of polluting the waters for everybody else. So, only provide feedback if you're reasonably sure that the feedback that you're providing is accurate. And this goes back to what Graham was saying about providing meaningful information. Don't just consuming information, but providing meaningful information back to the larger ecosystem so that everybody else can benefit from it as well. This data is kind of or this information is crowdsourced by all of you.
Here's an interesting one. If you had to choose between no fraud or no false declines or application drop-off, what would you choose and why?
That's absolutely a question for you, Billy.
I'm sorry, can you repeat that question?
If you had to choose between no fraud or no false declines, what would you choose and why?
I don't think I can choose between those two.
I was going to say,
I don't think there's a right answer between those two. I really don't. Because by the very nature of what you're doing, you're trading one off for the other. So I don't think that there's a right answer there.
It's the panacea, isn't it? It's what we talk about all the time, and it's that balance between fraud and friction. So, and then we get into a whole new topic about friction, intelligent friction, and some of it's good and some of it's bad, but it's the balance. And for one organization has a higher appetite for risk to get more customer throughput because they may have better margins or even lower margins, so they need the more volume to go through. And others may say, no, actually, we've got higher margins on that. We're quite happy to make sure we don't get any fraud losses because we have a lower throughput of customers. Depends on the organization, but it always comes down to balance and knowing where your fulcrum is, or your point in the middle.
Yeah, this is going to be a really bad answer, but I thought about it for a second. I would choose some fraud and some false declines, and then I would work really hard to minimize both of those. That's what we do today.
Does AI exacerbate the risk and frequency of synthetic ID production?
I think so. We had a scenario where somebody had gone through our KYC process, and they were referred to document verification, so they uploaded a picture of their face on their driver's license, but morphed with someone else's face. And that was done with AI and an AI video, morphing or editing tool or whatever. But it was good enough to get past, our vendor at the time. So, yeah, I don't know. We're in kind of uncharted territory when it comes to some of this stuff, and I think we're along for the ride like everybody else, but this goes back to what I was saying about the Swiss cheese defense or the gates analogy, and we're going to be putting up as many gates as possible. So good luck getting through all of them.
Probably another one for Billy, but each fraud solution out there says they are the best at identifying synthetic ID fraud. But how do you evaluate one versus the other? Is there any particular characteristics that you're looking for? Oh, this could be one I can use.
Yeah, I don't make these decisions.
I'll take a stab at it.
There you go.
Objectively, honestly, I think it comes down to what's the problem or problems that you're trying to solve for. Yeah. And if you can focus in on what those problems are, that should marry up nicely with the different providers that are out there that may have solutions to solve those problems. And these terrible salespeople, a lot of them will tell you whatever you want to hear. No, don't accept that. If they can't come to you with industry insights, with ROI information that's specifically tied to that problem you're trying to solve, if they can't provide you with case studies to show that they've got expertise in this area, it's probably not the right provider. Now, I'll asterisk that and say what I was talking about before, there are constantly emerging new entrants into this marketplace, and you should expect that. They should still be able to articulate the value of what their solution is. So I have been a buyer before. I am probably salespeople's least favorite buyer in the room because I will put them through a rigorous series of questions to make sure that the answers they're giving are the right ones to line up with the problem or problems that I'm trying to solve.
Going back to the question of friction, what are some of the mistakes that you've seen financial institutions make over the years that, all right, maybe this was too big of a barrier that they've put up, and they've really hurt their either experience, or they've hurt their chance at gaining more customers that maybe some people in the audience might find value in learning from?
I can take that. So my experience is, and it may sound controversial or counterintuitive, but I think the biggest mistake that organizations are making is a relentless focus on fraud detection. We need to be looking at, it's not just about anomalous behavior, fraudulent behavior. We also need to understand what our good customers look like. So, and that relates directly to that friction point, and it's about finding the balance. How do I find the balance? If I'm just looking out for suspicious activity, I'm only kind of fulfilling one side of that seesaw. If I can look out for, and if I know what good customer behavior looks like, and I understand my customers, it helps me do two things. It helps me remove that friction for those good customers, of which the majority of your customer base are, the majority of your transactions, the majority of the volume passing through your systems is genuine. Why do we need to put all of that friction in place if we understand and we know good customers? But secondly, by understanding who your good customers are, it starts to then highlight over here what looks anomalous and what doesn't look like good behavior. And that will help, apply some intelligent friction, as I say, so understanding the context within which you operate. Sometimes my good customers like a bit of friction because they know that I'm protecting them. And also maybe I don't actually want to give fraudsters the opportunity to get through a challenge. Maybe I just want to block them out. So understanding that what looks like good behavior for me is key. You can't just focus on what looks suspicious or what is fraudulent.
I have another answer too. I immediately went back to.
Am I stimulating the?
You are. You're making me think so much better. I can think back to when knowledge-based authentication was first being used within financial services, and there's a large bank in the U.S. who was trying to decide whether or not they should bring this into their student lending business and to their student banking business overall. They decided to wait and analyze, and this kind of gets into the analysis paralysis conundrum, and their average time to open up just a banking account, a DDA account for a college student was 9 business days. And this wasn't that long ago, and it was also at the same time that a lot of what I would consider fintechs were starting up. So this student who was at that point, a thin file customer without a lot of credit background was trying to establish credit, and they were being told, no, you need to wait for at least 9 business days, when they could have just plugged in the KBA questions and probably gone through the process much more quickly. They ended up losing a ton of business. So I would say do the appropriate analysis, but don't wait too long, because there could be a market and a cost implication as well.
We have just a few minutes left. So, as we look a little bit towards the future, not only the rest of this year, but we're going out a couple of years, what are some closing thoughts and advice that you'd like to leave our audience with? Maybe Sarah, I'll start with you.
I'm just going to go back to the collaboration piece. I think the more that you can do that, the more you can share with your peers within your own organizations, break down some of those silos within your industry groups as well. It will help all of us continue to be better. And then also, as a solution provider, share feedback with us. If you really love something, and I'm not just saying this specific to the solutions we have, but to all the other providers that are here, if there are good things that you see and you love, tell us about it, whether it's something we have or not. Or if there is just a burning need that needs to be met, and it doesn't seem like it's something that we or your other providers have, tell us about it. That's how innovation occurs. And until or unless we have that open dialogue, we can't really improve together.
Really?
There's one thing that maybe would be the best thing that I could tell you to, or reiterate for you to take away from this is have a process that lets you rapidly experiment and rapidly test out different fraud prevention techniques in your process, because that I really think gave us such an amazing amount of flexibility and agility to be able to see what works and what doesn't work and take things back to the drawing board while we figure it out. So we use feature toggles to do that, and that's a technical term, but anybody that is in the IT space should know what that is. And that, I think, was like an eye-opening experience for me to see how well that can be mated towards the KYC and the fraud prevention process.
Graham?
Yeah, going last, excuse me, I had to rapidly think of 3 there, just in case you stole 2. You stole 1. I would say behavior. If you can understand the behavior of your customers, your good customers, and also understand behavior of what anomalous activity looks like, you'll be able to better find that balance of detecting fraud and removing friction or applying intelligent friction for your good customers.
All right. Well, I think that's a good place to end. Thank you to our panel. Thank you to our audience for your great questions.